Last year, private equity funds were on defense. That year, they need to move forward. They need to innovate, and they find new strategy to invest.
Yeah, I would just say that the beginning of the year was very focused on some uncertainty that we had around tariffs, immigration, interest rates. And as the year progressed, we saw more activity. And so to Matthieu's point, we really saw the private equity funds pause at the beginning of the year and kind of get over that and start making more activity towards the end of the year.
Today, they are facing two issues. The first one is to raise money, to raise funds. And there is a lot of money on the market, but LPs, they would like to focus on the best one. And this is very hard to the other. To raise money, they need to specialize, they need to find the right strategy, they need to create platform to convince LPs to give to them money. And on the other side, relevant assets to invest are more and more rare on the market.
It's been hard for private equity funds to get money back to their LPs. And so when you can't get money back to your LPs, it's hard to raise more money. And so there's been vehicles like continuation funds that have helped get money back to LPs. We're also finally, I think, seeing a little bit of movement on selling of their platform companies. And so turning those back into money back to their LPs. I did think it was interesting that in the report, a large percentage of the funds were either in the market for raising a fund or within the next 12 months, they thought that they would raise money.
Last year, continuation fund was focused on very good asset because GPs would like to continue to create value because their portfolio company, they would like to structure with a continuation fund are very good assets. There is a shift on the continuation fund because there is some M&A process that did not close. And continuation fund now is a solution for M&A process. They are in trouble.
I think that there's a common theme of buy and build. We still see that happening where you're buying a platform, you're continuing to add on. We still see add-on activity at an all-time high, in especially in the U.S. I mean, that's been the strategy. But there is a focus on organic growth and operational improvement and value creation. So there is a focus there in making the companies that they own, because they are holding these companies for a longer period of time. And so there is a focus on how do we improve those companies to get them ready to go to market.
In Europe, buy and build still remain a very attractive strategy, but we need also to focus on organic growth. Assets with organic growth by volume, not only by price, still remain the main attractive asset to private equity investors. For that, they need to bring innovation or specialization in the company, and they focus on two main topics. The first one is sustainability. Sustainability to support the growth, and also AI, just not only for digitalization of the business, but also to win new clients. Globally, all the private equity funds would like to have an international expansion strategy for their portfolio company. In Europe, first, they would like to expand globally in all the countries, including CE region. But the main destination for buy and build strategy at the international level, it's North America, both Canada and US.
We're seeing the same thing in the U.S. is that they are looking to expand internationally, but also there is a focus on domestic investment right now. But we do see Canadian, we do see European expansion happening, especially for the larger portfolio companies. The smaller ones are traditionally staying pretty domestic focused. Two things in this is that companies or private equity funds are real focused on AI as far as how do they improve their investment strategies and how do they look at the landscape of companies they're going to invest in and how do they use that to improve their operational performance. So I would say at the fund itself, there's a lot of AI that's being utilized. But then at each of their portfolio companies, they're looking at ways to automate things, to use AI to improve operations, to make, to take some cost out or just to improve what they're able to do from a speed perspective. So we are seeing that a lot across the board.
In Europe, we have both side of digitalization. The first one is just to manage risk and regulation. And the second one is, as you say, it's just to support the growth. Over the last years, private equity funds face many and multiple issues. Geopolitical, economics, interest rates, COVID. Now, what we see, it's their ability to move fast, to adapt, to be more agile with very specific and specialized strategy.
And thankfully, there's a ton of money sitting there on the sidelines. I mean, the dry powder that we see ready to invest is an all-time high, really. And so we know that money is gonna be put to work. And so it's a pretty exciting time right now we've gone through some of this uncertainty, and now we're seeing more investment pick up. We're seeing private equity funds sell their portfolio companies to turn them over to other private equity funds. And so we really are excited about what might be happening in 2026. We do think there's going to be an increased amount of activity, and so looking forward to a good year.